Hey, good morning. Let's go over today's trade plan. So in the overnight session, we got some profit taking, some selling down to the 1945 support where responsive buyers were active. So the overnight session tells us that even though there was some short-term weakness in the market, it still held above 1945 for the most part. It one ticked below it and found buyers and then rotated back up. So at this point, short term, there's a little bit of a stalling, and we've seen some profit taking come into the market, but it's not necessarily a all-out bearish indication. So buyers can still maintain control here, and off the open, we are going to be using the 1945 to 46 half area as the very short-term bull-bear zone to establish our bias right off the open. Holding above it would bring the 49 half to 51 half initial resistance zone into play. We have the prior VPOC and the gap fill at 50 and 50 quarter, and that's the primary inflection point on the upside. So there's still potential that the market could fail at 49 half to 51 half and then rotate lower, but as long as we hold above 46 half, we should get a tag of that 49 half to 51 half area, and then depending on the reaction at initial resistance zone, we'll gauge how strong or weak the market is. So if we're able to take out the initial resistance zone to the upside, then we're probably going to head up and test the all-time high, which is yesterday's high at 54.75, and at that point buyers would be in control, and as long as we're seeing some strong internals, there's potential that the market could break higher. But if the internals are relatively weak or showing some clear weakness, then there is potential for the market to fail at 49 half to 51 half and then rotate lower and potentially even test below the micro bull bear zone. On the downside, below 45, we have initial support 39.75 to 41.75 and then 36 half to 38 half. And the idea is that bigger picture, buyers are still in control, and that's why even if we get a break below 45, even though it can result in some short-term selling, overall, we still expect responsive buyers to be active at the support zones below. So we can still look for long setups at 39.75 to 41.75 and definitely 36 half to 38 half, especially if we go there in a relatively straight line. 36 half to 38 half is a very good zone to buy on first test, and in most scenarios it's an automatic long setup. So the only time we would not be taking long setups at the support zones below is if there's some clear indication that that the day is turning out to be more of a trend type day. Now the expectation is not a trend day, but a lot of times, once you've balanced for a couple of days, you can get a trend morning and then a reversal in the afternoon. So where we buy in the morning in the event that we break 45 is really going to depend on the type of momentum we're seeing in the market. So if we're seeing, heavy negative tick readings, if the other markets are showing some more weakness, then we may wait until towards the bottom of the initial support zone, or potentially even closer to 36 half to 38 half to buy the market. But the idea is that the first pullback here is still going to attract buyers, and we're not expecting an all-out failure of this recent breakout to the upside. So the first pullback to initial support to 36 half, 38 half is going to be a very ideal setup on the long side. Anyone who's short the market, that would be a good target to cover shorts, and the net result is that we get some more aggressive buying at those zones, and at the very minimum we get a tradable reaction. So as long as we aren't seeing any clear signs of a trend morning, which would be extremely negative internals, S&P advanced decline pushing below minus 300, the NYSE advanced decline pushing below minus 12 to 1500, then perhaps we want to be a bit cautious and take some of those extended pullbacks closer to 36 half to 38 half. But as long as the internals are relatively balanced and the NYSE tick is not showing any major extremes, we can look to take long setups at the support zones below. And by the same idea, if 45 to 46 half breaks, then there could be a short setup in there as well, since we're expecting a break, down to initial support at that point. So there could be a short setup in there as well. It's just that given how bullish the market's been, I still want to be more careful and more cautious on the short side, because the short ideas could still be short-lived. They may not get a lot of continuation or just a lot of follow-through on the downside. In a bullish market, you typically see buyers stepping in towards the top of the support zones, and typically you see more aggressive ideas on the long side. And this is still a very bullish market. This is simply the first kind of stall or balancing or some profit-taking area that we've seen, but it's not a bearish indication. We could simply balance in a range and then break out even higher later in the week, or heading into next week. So overall, the market, on the larger time frames is still quite bullish. It's just that short term, we're seeing a slight pullback, some profit taking. So not really too concerned with that idea yet. Still want to be more focused on long setups. So off the open, let's see if buyers are able to hold 45 to 46.5, and if NQ is able to hold above 81 to 83. If that's the case, we could still get a decent bounce back up to 49.5, 51.5, potentially higher. And if it fails, then we'll simply look for long setups at the support zones below, maybe a short in between, but we're going to play the short side a bit tight with our risk management, not really going to give it a lot of room. Whereas with the long setups, I think they're just going to be easier setups to take. So those are the main thoughts heading into the morning. Volume is looking good in the Russell, so we're going to be keeping an eye on that. Volume is looking better today as compared to yesterday, but overall we're still running on below average volume in NQ and ES, and on above average volume in the Russell. So we'll keep these other markets in mind as well. Let's see if buyers are able to hold it at the micro bull bear zone, and we'll take it from there.